Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's go over what has happened and what we can expect moving into the rest of this shorter week. It's already a Tuesday, don't forget that. Tomorrow is Wednesday. And let's figure out what we can expect. So as usual, if you enjoy, don't forget to hit that like button. It does help a lot. This is not financial advice. I am not a financial advisor. And of course, don't forget my membership section on YouTube is live. The link is down below if you're interested, getting my thoughts on Tesla and updates and everything intraday as the stock is moving and all that good stuff, all the important updates for $3 a month. So if you're interested, link is below. Let's jump into it though. Tesla closing the day in the green, actually. A beautiful day for Tesla today, going up about 4.7%. I have to look at this one because this one technically is updating post-market, so it's not like super accurate on the close. So 4.69%, which is going to be putting us at 256.49 per share, which compared to the market is a very respectable outperformance today, considering the market is flat, if not slightly in the red. So what does this all mean, right? Is this good? Is this bad? Are we rocketing? Are we at the top here, or what's happening? So first and foremost, there's good news and bad news. Let's start with the good news first. The good news is the fact that obviously big outperformance today for Tesla. That's number one. Number two, we did actually get back into this channel that we broke out of, I believe, just last week, right? We were in this channel ever since it's dropped down to about the 210s. Beautiful bounce since then, right? Massive bounce. I mean, honestly, just a bounce from, if you just say somehow we're patient enough to wait exactly to this bottom here, and let's say you happen to be the best trader in the planet Earth, and you sold pretty much at the top. That's a 22% run, and literally just not that many days, really, honestly, like about a week or a week and a half or so, which is not a lot, right? Beautiful bounce. But we did actually break down out of this overall ascending channel roughly that we were in, unfortunately, on this massive red day just last week. But thankfully today we came up and we got back into it. But you can see it was a little bit, and this is kind of what I talked about in my updates over here. You can see how, we pretty much initially came up and it looked like nothing more than a simple retest. And that's what it looked like on these two candles, the first 2 hourly candles of the day. Beautiful retests, and so far we were getting rejected. And this looked like just nothing more than a simple retest into a continuation back down. However, on the third hour, and somewhere in the third hour, we did get this beautiful green candle, punched our way back into this channel. And not only did we punch our way back in, but we came back down, pretty much retested this channel once again. And now we're closing pretty much right at the bottom of the channel, but more importantly, inside the channel. It's a little bit on thin ice here, of course, but pretty damn good stuff. Now, we are, of course, back at the overall rejection period that we had right over here, right around that, kind of close to 260s almost, right? High 250s to pretty much 260, very low 260s. And we got obviously a lot of rejection there into a massive sell-off following that, right? And this sell-off alone was a pretty substantial sell-off. If you were to go from this top over here, pretty much the final rejection, about 7.5% sell-off, which is a pretty respectable sell-off. Now, the question is that going to happen again, or do we finally break through? Personally, I wouldn't be surprised if we actually break through, right? I would not be surprised if we actually break through, enter back into the 260s, and more importantly, make our way over to probably the most crucial level that I've been talking about ever since this pretty much sell-off even started, which is going to be, again, like I said many times, but to reiterate, 267 roughly to $207. Again, taking the Fibonacci from the swing high, which was just before earnings, which feels like it was so long ago, but apparently it wasn't that long ago. But nonetheless, right, from earnings into this overall massive sell-off, which now obviously this 210 area was the short-term bottom or the swing low, right? And of course, you can see we are still dancing around the 255 level, which is, like I said, probably my most favorite level to retrace to, whether it's on a dead cat bounce or whether it's on a mini correction after a massive rally, whatever the case may be. But this is a very crucial level to retrace to. It's a very common level. However, with that being said, I said many times, this 266 to as high as maybe 270 is the most important level to me, because this is a 618 level, which is the level to break in order to finish a certain trend. In this case, obviously the trend is still technically down since earnings, right? Massive sell-off, and this at the moment, in theory, of course, can still be nothing more than a simple dead cat bounce, especially given that we are in September and October, Tesla's worst months by far. Like, it's not even remotely close. You can see over here, September is the worst month for the market by far, and we're obviously just barely into September. There's a lot of September to go still, but October is also historically, of course, doesn't mean it has to happen this time, but historically Tesla's worst 2 months by a decent margin as well. So, right, keep that in mind. We have potentially some, painful-ish, or at least at the very least, bumpy road ahead of us for the next couple of months or so for Tesla. In theory, of course, right? Just going strictly off of statistical numbers. Now, with that being said, this level is important because this ends the downtrend, right? At least in my eyes, right? If this dead cat bounce, which again, if we break above, it won't be a dead cat bounce, but if we essentially break above this kind of, let's just say 270 to make it simple, not only do we break above a very crucial resistance level, which is just bullish in itself, but again, breaking above a 618 level just kind of cancels the downtrend of, in this case, being right now the downtrend from earnings, it cancels it out and it actually flips it back to potentially being an uptrend now, right? It removes the situation of being a downtrend, assuming we break above that 618 level. Same concept that I brought up over here on the Fibonacci. This is where things are a little more concerning in my opinion, but you can see, right, from this overall all-time highs to this lows we had at about $100 per share. Same thing, right? We came up, beautiful bounce, beautiful, again, potential dead cat / bear flag, came up exactly to that 618 level, which is pretty much $300 per share roughly, and we got a massive rejection into a massive sell-off. So another example of why that 618 level is so important, and until we can break 300, Tesla's still technically not in an actual uptrend, right? This is still potentially a very dangerous area, still an area that you shouldn't take for granted. In my opinion, as a bull, don't take it for granted, because this still could be a absolutely gigantic bear flag, which if it does play out, which will be essentially breaking below about 220, maybe 215, and especially 200. We're pretty much going to be revisiting the mid 100s. So just keep that in mind. But that's a little bit, that'll take a lot longer to play out. But that's kind of what I am seeing. Now, the thing that's a little bit more not amazing here is the fact that on the daily, you can see there's a bit of a bearish divergence. I wouldn't say it's the most obvious bearish divergence on the daily. It's more obvious on the 65-minute chart. We'll go over soon. But, you can see as the stock is, of course, making its way back up to these levels over here where we were just trading at not that long ago, just last week. RSI is obviously, we're pretty much at the same level, but the RSI is definitely lower, which isn't great. But on the flip side, we are above the 21 EMA, which is, of course, good news. We are, of course, still getting rejected by the 50-day moving average, which isn't good news, right? So we're still in that little bit of a sandwich area, right? We never really broke below the 21 EMA necessarily, right? We have been kind of holding it ever since this massive candle, right? Came up, came back, retested it. We talked about this last week. And of course, now we're pretty much bouncing right off of it, right back up to the 50-day moving average, but once again, finding a bit of issues around this general area. But I do think that there's a decent chance that we'll break through it. But with that being said, I still think this will be an ultimate bear trap. And I do think that if we do break through it, which I think is likely, I think is a very healthy chance, I do think we'll come up to that dreaded level over here I've been talking about, which is around that 267, 270 level. And I think that's what's going to really smack us back down. And I think that's where we're going to top for the next couple months or so. And I think from there, we'll smack back down, probably come back to around the mid 200s or so. Give or take, of course, right? And then I think, maybe even lower, maybe 220s once again. And I think from there, we'll kind of go sideways for a while, kind of, really do not a whole lot, in my opinion, for the next 2 months before finally truly finding a base. And I think kind of mid to end of October, especially into November, we're going to really start to take off. And that's when I think where the next kind of, true bull rally will begin once again for Tesla. That's just my kind of opinion right now. We'll see how it changes, of course, over the course. But moving over to the 65-minute chart, you can see here, looking a lot, on the RSI at least, looking a lot less good in terms of that whole bearish divergence, right? It's looking like an actual bearish divergence, right? We had a bit of a bearish divergence when we were just trading sideways essentially over here in the 256 to 260s area, which is exactly where we're at right now, right? As you can see, as we were going sideways, if not even slightly up, we had a bit of a bearish divergence because it was just slowly going lower and lower, right? Lower lows, lower highs. And then we had the massive sell-off, and now we're pretty much back to roughly the exact same level, just only a couple dollars off, but meaningfully lower on the RSI on the 65-minute chart than what we were at back over here when we were trading in terms of the stock price at pretty much the same level that we are at right now. So that to me is a bit more of a larger bearish divergence setting up, which all that tells me is the fact that there's a decent chance that this is going to be nothing more than a bear trap. I still think there is potential to go higher. On the flip side, if we do go up to 270 to retest that, this might remove this bearish divergence, because I think the RSI will probably make higher highs, because there's still a decent amount of room to the upside left before we go to 270. But as it stands right now, the way I look at it is that this is nothing more than a bearish divergence. Of course, we have the MACD crossing and starting to look a little bit bullish, which is why I do think that we will cross this level. I do think we will enter the 260s. It's just a matter of how high do we go in the 260s. I personally don't think we'll go too much higher, and I'd be surprised if we just break through 270 within the next week or two. Honestly, that would be pretty surprising to me. I think it's possible still. That's why I'm not betting against it necessarily, but I am hedging slightly because I don't think it'll happen. But if it does, that's perfectly fine with me. I am selling calls against my shares into October and November in terms of the date, sitting at pretty much $300 to $320 strikes. So if we do, hey, no worries, I'm happy with that. And if we don't, I'm still making money on the downside through those sold calls. And then, of course, I'll start selling puts. But that's the main thing. Like, I don't want to overcomplicate this video too much. Sometimes I feel like, we overcomplicate technical analysis. And I think this is a beautiful example of, honestly, sometimes it really is this simple, right? We bounce off the 21 EMA. We are back to the 50-day moving average. We're still sandwiched in between. The MACDs for both scenarios are looking good. I think that it'll cross over. We entered back into the channel. And honestly, very short term, it's looking like there is a decent chance to push up a little bit higher. But I do think it'll overall end up being a bull trap around the mid to high 260s, potentially 270. I think it'll be a bull trap. And I think from there, we'll get smacked back down. And I think we're going to be doing a whole lot of nothing, if not being a little bit bearish for the rest of September and potentially a bit of October as well, before we really find our base. And I think that's when we're really going to start getting ready for the actual bull run. Last thing I want to take a quick look at is, of course, going to be the options flow. Let's take a look at it and see what it's looking like. And you can see short term, pretty much for end of September to October, maybe even a touch of November, looking overall substantially more bearish. People are not betting on this run continuing on for too much longer, and there are some definitely bearish positions rolling in over here for end of September to pretty much end of October, right? Those two bearish months. So that's not good. However, with that being said, you can see as we move forward into pretty much 2024, a lot more green bubbles than red bubbles. Nothing too major, and I wouldn't call these, extremely bullish ones, but they're 500K in premium, which isn't too bad, right? But I wouldn't put a substantial amount of weight into these as of right now, because it's not some major bet. It's nothing completely overly confident, right? It's just people are betting the fact that long-term, Tesla's going to be fine. And I think that that's the case. Absolutely. No questions asked. But short term, definitely a little bit more uncertain, especially with these 2 months. And, it's an area to be a little bit more cautious of for now, at least, right? That's just my opinion. Again, that's just what I am seeing. That's what the options flow at the moment, at least, is saying. And so with that being said and done, ladies and gentlemen, thank you so much for watching. If you enjoyed the video, don't forget to hit that like button. It does help a lot. If you're interested in using TransPattern for yourself, by the way, to trade and have all these tools available to you as well, link is below. Definitely check it out. Great platform. But thanks for watching. See you tomorrow. Peace.